We are joined by the management as well. We have Debashis Chatterjee, CEO and MD at LTIMindtree, joining in with us. Thank you so much, Mr. Chatterjee, for joining in with us this afternoon. And let's just start by talking about your numbers, right? You sounded very confident about your second half and being stronger than the first half of FY24. What gives you such kind of a confidence?
See, as we have been always saying that this whole year has been a very cautious outlook. And now we are very confident to say that the cautiousness will continue through the rest of the calendar year. But having said that, we have closed many opportunities in Q1 and Q2, which are ramping up. So in spite of the challenges that we see in Q3 in terms of furloughs, in terms of some ramp down, etc. But given the fact that there are a lot of ramp ups also which will happen, we are very confident that our second half will be better than the first half of FY24. And apart from that, we are also hopeful that many of the clients are now talking about their budgets for the next year. And most of the clients that we work with, their fiscals are January to December. So I'm hoping that there will be some spending which may come back as we go along. But at least based on the portfolio of clients that we have and the behavior that we see, we are fairly confident that our H2 will be better than H1.
Good afternoon, Mr. Chatterjee. This is Shell also joining in the conversation. When you spoke last with ET Now, you said that the double-digit growth was unlikely in FY24. But you think it will come back in FY25, and also for FY24, can we expect at least 8 to 10% growth to come in for your company?
Well, I think it's difficult to call out at this point of time because nobody really anticipated the level of cautiousness that we have experienced from the clients. And that's why, last year we were very confident that we should see good growth. But having seen the Q1 and Q2, it is probably not fair to call out anything specifically. But as I said, that we are fairly confident that our second half will be better than the first half. So you can do the maths, and you can we have to probably wait for another quarter to see where we eventually end up. But definitely we are confident that second half will be better than the first half.
All right. Mr. Chatterjee, by when do you expect recovery in the BFSI? And also, you could talk to us about Q3 furloughs. Are they expected to be higher than usual, given the fact that we are already in the quarter?
Well, I think, the macro is not really helping BFSI, especially, if you really want to see the improvement in BFSI, probably one macro factor which has to change is the interest rates need to start coming down, which I don't think we can say anything at this point of time. Yeah, in terms of furloughs, furlough is a phenomenon that we always see in the Q3, and this quarter is not going to be any different. The only difference that we find is that typically the furloughs used to be restricted to a specific set of clients within specific industry segments. But this time we see that the furloughs have been more broad-based across almost all industries, many more clients. So essentially the furloughs that we are expecting in Q3 will be higher than as we have seen in the previous year. But having said that, there are also ramp-ups that we are having in some of the deals that we have closed, as I mentioned. So when I say that H2 will be better than H1, I'm actually taking into account and considering the furloughs as well.
Also, just what is your margins were resilient this quarter? Do you expect it to hit that 17-18% mark by FY24 exit?
Yeah, what we have said that 17 to 18% is what we expect as an exit in Q4, and we are pretty much on track. And as you probably know, and I have mentioned yesterday as well in my prepared remarks, that there is a margin expansion program that we have put in place in the last 2 quarters. And the margin is a discipline. It's not something that you can do just one quarter. So that discipline is already in place. And what you see in terms of holding onto the margin in spite of giving a wage hike, which had a 200 basis points impact, is basically a result of the margin expansion program that is already in place. So we are very confident that our margin story will hold good, and by Q4 exit, we should be in the range of 17 to 18%.
Also, what about deal wins? Have they been strong? They have been strong at $1.3 billion. Is this going to continue?
Well, I think there are the deal activity right now is fairly significant, and that's what we have been always saying, that we live in this paradoxical times, that deal activities are quite vibrant. Our pipeline is very strong. We are closing deals in every quarter. We have quite a few deals that we need to close this quarter as well. But having said that, I think we need to also account for the fact that many of the deals, the decision cycles are very long. I think that's something which is worrying us. And typically what we have seen is that there is always a budget flush in Q3 because clients try to spend a little more. But I think this particular year we are not seeing that. I think the cautiousness is overhanging on everybody's mind. So we don't really see that there'll be any excess spending in Q3. In fact, we see the contrary. That's why the furloughs are going to be significantly higher.
Right. Are you getting any early sense on client budgets for the calendar year 2024?
Well, I think we have to give it a little more time because clients are just in the middle. They've just started the process. So hopefully by end of next quarter, we'll get a better visibility in terms of how the budgets play out as far as the next calendar year and the fiscal is concerned.
All right, let me actually touch upon a very pertinent point right now when it comes to the IT sector, and that is actually headcount. Finally, some additions that you're seeing in your headcount after a couple of quarters of softness. Are you expecting the trend of headcount addition to continue going ahead, or are you seeing some other signals altogether when it comes to your headcount?
See, you have to look at headcount in the context of a few things, especially utilization. So if you look at our utilization right now, it's an all-time high. And if the utilization is so high, and we think that it will be remaining in that range for some time, we have to add headcount as we get into more deals. And the second aspect which you need to also keep in mind is say 1 year back, we were hiring ahead of time because the market conditions were also very tight. But I don't think the conditions are exactly the same as it was 1 year back. So given the fact that it is not difficult to hire just in time, and also the talent is available, so we feel that we will keep on adding headcount based on the business needs as and when it is required. But obviously the last 3 quarters or 4 quarters, we have been very focused in terms of cleaning up the bench. That's why you saw the headcount was controlled. But as we go along, depending on the business needs, we'll be definitely adding headcounts as and when it's required.
Right. And lastly, if you could just talk to us about the vendor consolidation, what's happening on that front, and are you seeing more such large deals coming your way?
Well, I can say that vendor consolidation can play both ways, but as of now, I can only say that it has been favorable to us.
Okay, Mr. Chatterjee, thank you so much for joining in with us this afternoon on ET Now and giving us an understanding in terms of your numbers. What should